Sales are falling off a cliff, but inventory is still climbing. But above all, pricing is remaining the same. What the heck is going on? I can't wait to get into it. The detached market is shifting, with sales on the low and inventory steadily climbing. What does this mean for buyers and sellers in the market right now? Well, today we're diving into the latest trends, the latest statistics from January 2025, the Greater Vancouver stats, and we're really going to figure out whether it's a good time to buy or whether it's a good time to sell. So first, we're going to look at sales and inventory. More listings, fewer sales. Is the market slowing down? Is this just a seasonal trend? Let's get into it. So again, we're looking at the detached market, single family homes, and sales remain flat year over year. There were 380 detached home sales in January 2025, and there were 379 home sales last January in 2024. So it has remained relatively flat, no real changes year over year. But this is the crazy one. Home sales dropped by almost 27% from December 2024 to January 2025. So last month there were 520 sales, and this month there was only 380. Like I said, 27% drop. That is ginormous. You know, declines like this are expected seasonally. Like, people don't really want to buy and sell during the holiday season. This is a time to hang out and eat turkey and chill with family. But a drop in sales this big is huge. I mean, usually we see things start to pick up a little bit in January, especially compared to December when everyone's on vacation. But this month, a 27% decrease from the notoriously slowest month in the entire year. That is wild. This really does show us that there is some cooling in demand. But just wait until we get into the listings numbers. It is wild, the amount of listings that are coming to the market and the total lack of buyer demand that is here right now. So now when we look at listings, they are increasing quickly, the total opposite to the amount of sales month over month. So this month there were around 4,100 new listings, but in December there were only 3,500 or so. So the amount of listings are up 15.3%. So what does this mean for detached listings? Well, first of all, there is a ton of inventory. So if you're a buyer shopping detached homes, this is the perfect scenario. You have as much choice as you'll ever want. And when we look at those sales numbers, like the sales were down 27% month over month, inventory is up 15%. There is a good chance that when you're going in to see these homes, you're not facing a ton of competition. And if one home doesn't fit the bill or the seller is not willing to negotiate to a price that's fair to you, there's a good chance there are 10 other sellers that are willing to work with you in homes that probably fit the bill. The competition right now doesn't seem to be on the buyer side, it seems to be on the seller side. Now let's look at days on market. The days on market are important because if they start to go up, it shows that homes are sitting on the market for longer. This means either the buyers are not as active, there's not enough demand to soak up all the inventory, or there's way too much inventory and buyers have a lot to choose from. Higher days on market means downward pressure on prices. Right now, we are at a 64 days on market average for detached homes in Vancouver. Last month, it was at 60. This is a 4-day increase, which may not seem like much, but it's almost 10%. And it's a clear sign that buyers are slowly becoming more patient or more selective. All right, now let's look at the pricing trends. So first of all, and it's a huge surprise to me, especially seeing sales fall off a cliff, inventory on the rise, but we're still seeing prices climb month over month and year over year. So first of all, we're seeing the benchmark price rise year over year by 3.1% to just over $2 million. And when we look at month over month, we're seeing prices still increase from December. So the benchmark price last month in December was just under 2 million. I'll put the exact numbers on the screen. Just under 2 million. And then this month we're just over 2 million, a 0.4% increase, but still so surprising given that we've had way fewer sales in the detached market and way more listings. It's wild to me. And we saw this all throughout last year, despite all the downward pressure on prices. We've got rising mortgage rates. We've got economic uncertainty, buyer uncertainty, lack of confidence in the market, and we still saw prices stay relatively stable. And as you can see, we actually were up 3% year over year. It's wild how the market sentiment is so different than what the numbers actually are. So now let's look at the sales to active ratio. This tells us whether we're in a buyer's market or a seller's market. If we're over like 20 or so percent, we're in a seller's market. If we're under 10%, we're in a buyer's market. Let's keep it simple. So last month, we were at a 14.6 sales to active ratio for the detached market. But the sales to active ratio plummeted to 9.2%. So we moved from a balanced market to a buyer's market. This means we can see downward pressure on pricing over the next couple months. It means that we have a lot more inventory compared to the amount of sales that are happening in the market. We're looking at 11 to 12 months of inventory on the market right now. So if you're a buyer right now shopping for a detached home, you are laughing. These sales to active ratios show again that there's so much selection for buyers, and sellers really need to negotiate to keep these buyers interested in their home. I wouldn't be surprised if we see prices start to drop over the next couple months. Or list prices being slashed on some of these listings. And again, this is just for detached homes. These numbers are crazy. I'm excited to see if these are the same numbers that we're seeing in the condo market and in the townhome market as well. Videos coming on those soon, but let's get back into this. And then a couple market trends. Luxury markets, as usual, are sitting for longer. I've got a really good friend who's had this home listed in Fraser Heights forever, like at the 3 million mark. No activity, no calls for months. And there were some good comparables. It seems like it's a pretty fair price. But when we look at the detached homes in that entry level price point, so in the low millions, for example, I have a buyer that's shopping in Maple Ridge for some ranchers with an attached garage. In the 1.1 to 1.15 million range, you can find some really good options, but man, it is so competitive. Once we get up into the 1.4 to 1.6 million range, there's still quite a few buyers, but it's way less competitive. But it is a good thing right now if you're a buyer in those price points, because although it may remain competitive for now, it could get extremely competitive if, for example, there's more buyer demand that floods the market and all these listings start to get absorbed. All right, so what's next for detached homes? First of all, rising inventory means more buying power. With listings increasing faster than sales, buyers have more power to negotiate with sellers. Because if one seller decides not to flex on their price, they can always just go to the next one. Because of this, we can expect sellers to be more flexible on price and terms of their offers. So we'll start to see more offers with subjects, long subject removal dates, a lot of contingencies. Cash offers or subject-free offers will not be as common as they are in a really hot market or in a seller's market. This wouldn't be a market update video if we didn't take the interest rates into account. So it seems interest rate sensitivity will dictate demand. What I mean by this is many buyers are still waiting for interest rate cuts before they jump in. There's still some uncertainty with the US tariffs and if they are implemented, how they'll affect housing prices in the long term. And then with mortgage rates on the horizon, I mean, they're expecting mortgage rates to drop towards the end of 2025. And then mortgage rates are still expected to drop later in the year. I mean, those were projected from last year, but recently they were projecting 6 consecutive rate cuts, which is wild. Yeah, and it creates that tough situation where buyers are hesitant to get into the market because they know interest rates are going to drop. But then again, like when interest rates drop, usually prices start to come up. Either way, it puts the market in a weird scenario where buyers are not sure whether or not they should try to get into the market now where prices are reasonable and competition is fair. Or wait when interest rates drop, they can get a really great mortgage, but then there's that risk where they could be fighting other buyers for the homes that they want. There's more demand, less inventory, etc., etc. And then if we look at where demand is placed in Greater Vancouver overall, we're seeing a lot of activity in the suburban markets. So that's like Langley, Maple Ridge, Surrey, where you're seeing more homes in that affordable price range and you're able to get a lot more house for your dollar. And then you're seeing days on market still going up in markets like Vancouver West and West Vancouver, where there's a lot of resistance to those high price properties. All right, so let's wrap this up with some recommendations and the outlook on the future market. So in summary for buyers, I'll be quick because we talked about buyers this entire video. More listings means more negotiating power. If you're looking to buy right now, may be a really good time with all this inventory on the market. And if you're waiting for rate cuts, consider a purchase now or in the next couple months. At least keep a really close eye on the market because once interest rates really start to drop, we might see prices start to come up, buyer activity start to come up, and you may miss that opportunity to get into a home. If it's a really specific home you're looking for, right now is a good time because there's a lot of selection, not a lot of competition. There's one thing that's important outside of selection is the price that you pay, because with your interest rate, you can always refinance later, but that purchase price is going to decide the size of your mortgage. But the main thing for buyer is look for motivated sellers. A motivated seller in this market right now maybe willing to accept offers way below ask, meaning you could possibly get an incredible deal that can outlast the market ebbs and flows. Even if the market goes down, you can buy with enough equity. And if the market goes up, you're laughing. All right, now for sellers, if you are planning to list right now or you have your home on the market, you know what? You need to be competitive and you need to stand out amongst all the other listings in your neighborhood. So really you need to focus on price and presentation. If you are overpriced, it'll lead to longer days on market and buyers overlooking your listing for the fresh new ones on the market. And guess what? There is a ton of them right now. There could be some merit if you're a seller to wait for the spring market because that could bring more buyers. But that is a tough bet and I hesitate to advise sellers that way because with rising inventory and inventory on that trajectory, there's a good chance that the spring market might bring even more inventory. And you just really need to hope that there's enough buyers to eat up that demand or eat up that supply. And if you are listed right now and your home is not selling, consider different strategies, strategic price adjustments, and targeted marketing. And now for market outlook. So in the short term, more inventory could lead to softer prices, price reductions in the coming month. And then in the mid to long term, if interest rates actually do drop and if they cut them as aggressively as they say they're going to, demand should rebound with more buyers entering the market, feeling confident in the amount that they can afford and the outlook of the potential market, and then potentially provide some upward pressure for home prices. But overall, the detached market right now is looking pretty soft. We were in a balanced market, now we're shifting into a buyer's market. That 27% increase in the amount of new listings, the huge drop in the number of sales, and then that influx of new listings is really hurting the detached market if you're a seller. It's a really good outlook if you're a buyer, but we're definitely right now in a soft buyer's market. And I will say real quick, I don't prefer a buyer's market or a seller's market. I love a balanced market where days on market are fair for both sides of the table. You're able to get some offers. You're not fighting hand over fist for properties. Buyers aren't making bad decisions. Home prices aren't skyrocketing, or the market's just not completely dead. A balanced market, I think, to me anyways, is ideal. If you're a buyer right now, take advantage of it. And if you're a seller, consider holding off. But if you need to sell, just be aggressive with your pricing. And that's your detached home market for January 2025. If this helped you understand the market, be sure to subscribe. I've still got a condo update for January 2025 and a townhome update. I'm excited to see if those numbers actually look like these crazy numbers in the detached market. But we'll find out in a sec. Leave a comment if you have them. I'll answer all the questions and I'll see you on the next one. Peace.